Billionaire investor Steve Cohen appears to be gearing up and getting back into the hedge fund game. This comes after Cohen's previous fund, SAC Capital, was forced to plead guilty to insider trading back in 2013. He was banned from doing that kind of work, but now he's opened a new fund. It appears he's expanding. Charlie's breaking it.
We should point out that Steve Cohen can run his own massive net worth of something like $9 billion through something known as .72 Asset Management. SAC Capital closed down following that criminal insider trading plea, but he's now managing his own money. But here's what we do know. He is showing signs that he's going to go beyond that he thinks he can beat back some of these regulatory charges, including a failure to supervise charge that prevents him from managing money. And he's right now going out and hiring big time, from what we understand, in Asia, in London, particularly Asia. It's very interesting. He's hiring not just traders, but he's hiring people like human resources officials, people that generally you don't hire if you're looking to contract or you can't bring in outside money. When SEC was at its height, it was $16 billion. After the SEC Capital was his former fund, one of the biggest, maybe the most profitable hedge fund ever, right? When that was forced to close, it went down to about $9 billion, okay? And why is that? Because it now manages only Steve Cohen's own massive net worth. When they went down in terms of assets under management, they also began firing people, closing offices. Here's what we know. They are now hiring people. They are reopening offices, like in London. They are now looking to hire people in Asia, and they're telling this to recruiters. So what are people saying? Well, Steve Cohen thinks he can get back in the business, that he can beat these regulatory charges. Why does he have this confidence? Pretty simple. It's called the federal courts, the Second Circuit Court of Appeals, which basically made some of those insider trading convictions, made it harder to bring those cases. Right. One of those cases involved a guy named Michael Steinberg, who used to work at SAC. Michael Steinberg figures prominently in Steve Cohen's failure to supervise case. So if Michael Steinberg's case is out, and it is away, he's been exonerated, well, then half the charges against Steve Cohen goes away. And a lot of people, including Steve Cohen himself, is betting, and he's a pretty good bettor, pretty good trader, that he's going to be back in business.
He's so good, he never lost money.
You should point out
he had unbelievable records year after year, which caught the attention of the regulators.
Yeah, and this is just
how can he do that?
And this is just anecdotal now.
Right.
Just so you know that even after the convictions, he's still pretty good. Right. So he went down from 16 to 9, right? $9 billion, his own massive net worth.
Jim Frischling's nodding like, hey, why can't I do that?
But listen,
I can't pull up those numbers.
2 years,
right?
Here's the fascinating thing: in 2 years, it's back up to 12. So he made $2 billion in 2 years trading, obviously without insider information. They were all over him. So I think this is pretty interesting. And I'll tell you, he used to charge what? He went
to 3 and 30. When other guys were doing 220, he was 330.
Was it 3 and 50?
That means
could have been 3. Actually, you're right. It could have been actually
3% and 30% of the profits and the
50% of the profits.
50% of the profits, 3 points,
and he keeps 3 points. That's more than anybody else. I think people would give him money now again.
Well, again, even running a $9 billion fund of his own money requires tremendous infrastructure and whatnot. But I will say, to your point, if the convictions are being overturned, which was the reason he had to step out, you certainly can expect he can make a return.